Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning and we'll be taking stock of all the cues for trade this morning, all the stocks that will be in focus, and we'll also be taking stock of the report card of the IT sector. Remember, the big three, Infosys, HCL Tech and TCS, have reported their earnings, so we will be taking stock of their report card, and we'll also be getting your stock related queries answered by our technical expert on the show. So if you have any queries, shoot them to us on our YouTube feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Wall Street ends lower following mixed corporate earnings. Yields tumble as fresh data signals contraction in the economy. Asian markets too start largely lower, and the SGX Nifty is hinting at a flat but positive start for the Indian market. Oil prices are perched near a 3-week low as demand concerns intensify, weighed down by recession fears in the US. Brent trades around $80 a barrel. RBI may have held rates at its last meeting, but MPC members are unanimous in raising concerns over rising prices, say that the war on inflation is far from over. The minutes of the April meeting show RBI governor reiterating that there is no pivot in the policy, only a pause. IT major HCL Tech reports a steady quarter as earnings come in line with estimates. There are no negative surprises and the management delivers better than expected revenue growth guidance, says its deal pipeline is near all-time high. Reliance Industries is all set to report its fourth quarter numbers today. CNBC TV18 poll shows most businesses are likely to deliver decent growth. Retail and Geo are likely to continue a steady run. Well, let's go across to my colleague Madhuchanda, who's joining in this morning to take stock of the IT report card. Good morning, Madhu. Good to have you on the show. Well, HCL Tech reported inline set of numbers, no negative surprises coming out, which means a positive surprise, right? Given the fact that TCS and Infosys have handed in a pretty disappointing set of numbers. What is your first reading of HCL Tech numbers, and what do you make out of the management commentary on future outlook?
Yeah, Nandita, it was a kind of a relief for us to see HCL Tech delivering interesting set of numbers. As you rightly pointed out, there was very little negative surprise. The HCL software was expected to be seasonally weak, and it turned out to be so. There was a slight negative surprise from engineering and R&D, where there was kind of an $18 million revenue impact in the month of March, which dragged it down. And that is why services growth on a sequential basis was only 0.6%. But there was underlying strength in IT and business services, which grew by about 1.6% sequentially in constant currency, and also saw sequential improvement in margin. And I think this is extremely positive in the context of whatever we have seen so far.
Right, you know, in terms of revenue growth guidance, HCL Tech has guided for 6 to 8% vis-a-vis expectations of 5 to 7%. You know, if you look at Infosys, that there was a contraction of 3.2%, and for TCS also it was below estimates and came in at 0.4%. Do you think HCL Tech is taking a lead when it comes to the quarterly performance, given the kind of guidance that we've seen coming in from there?
Yeah, I mean, HCL Tech's not only guidance, as you rightly pointed out, 6 to 8% is a guidance which is absolutely looks achievable, given the kind of orders that they have gotten so far, the kind of pipeline that they are talking about, and the overall outlook that they talked about. I really wanted to point out two things which we took away from the conference call yesterday. One was HCL CEO clearly indicated that the floor in FY24 is going to be still above the pre-pandemic level. And this time around, he expects the recovery to be really fast. I think given, you know, these kind of commentary, I think HCL Tech's looks set to deliver on the guidance and could surprise if the, you know, macro turns positive.
Right. Madhu, management is pretty optimistic on the large deal front, and HCL Tech has also pipped both TCS and Infosys when it comes to hiring as well. In fact, management has said that there'll be no slowdown in hiring in the coming fiscal, right? So do you think this could pose a challenge for margins in the coming quarters?
Not at all. actually, there are only positive takeaways from the hiring, as you have rightly pointed out, that the net hiring was actually sequentially higher, although the fresher hiring was sequentially a tad lower, and this moderation is expected given the current milieu. But what is most important is the attrition is falling across the board for industry. So the supply side pressure is easing. And in this context, since the management is still hiring, we see that as a sign of confidence for the future. And we don't see the kind of wage pressure that we saw last year. So overall, in fact, we feel that although the guidance on margin is a little muted at 18 to 19%, the management clearly stated that they would like to go back to their aspirational level of 19 to 20%. And we do see that HCL Tech does have the levers of, improving utilization, improving the pyramid, etc., to get there.
Right. We also saw some Midcap IT earnings come in yesterday. Mastek has clearly surprised on the upside and, revenue growth of over 5%. And Cyient has also handed in a pretty strong report card for the quarter gone by. Do you think this quarter largely belonged to Midcaps, given the kind of performance that we witnessed from the last from two companies?
Yeah, I mean, the Cyient result yesterday was a significantly positive surprise with a 6.6% kind of sequential growth in constant currency, good order inflows, margin uptick, etc. And you also pointed out about Mastek. But let us not make this mistake of mid-cap versus large cap. It's going to be extremely company specific. It also depends on the verticals that they are present in. For instance, technology like high-tech, telecom, parts of BFSI, are definitely pockets where there are issues, there are still troubles. So let us not categorize as mid-cap, large cap. We need to be watchful about each and every company. Next week is going to be very critical because we have two leading large caps, Wipro and TechM, as well as two very interesting mid caps, Coforge and Persistent, reporting numbers. So let's see as the quarter goes.
Right, Madhu, I will be getting you back on the show next week to discuss all those earnings that you mentioned. With that, thanks a lot for taking out time and joining us and decoding the numbers for us. Let's now go across to our technical expert for today, Raja Venkatraman of Neotrader is joining in this morning. Good morning, Raja. Good to have you on the show. Markets have been doing pretty much nothing over the last few days. In fact, Nifty just about managed to end in the positive zone yesterday. Do you expect the Nifty to consolidate below that 17,700 levels now?
The entire market is in a state of confusion right now. Well, we are not getting any kind of signals from the global cues nor the domestic cues. And what's really happening is everyone thought that the IT is going to take further beating with HCL Tech. And what happened is HCL Tech came with inline numbers and that has stalled the entire fall in IT at the moment. So what's really happening is that while Nifty and Bank Nifty are showing some poise to move higher, what is really happening is that the other index, IT, which still continues to have a reasonable attraction amongst investors, traders, is finding itself at the July 22 lows. So what's really to be taken care of is that if that low is broken, then we could see some spiraling downwards. Now, for that to happen, we also need some currency play to kick in. So what's really happening is that there is no clarity either on the currency front nor on the indices front. So we will continue to trade in a range-bound fashion. So 18,000 tops is going to be the scenario for this month at least. And I don't see any particular reason for 18,000 to be crossed for the next 2 to 3 weeks. So what every market participant has to do is indulge in the market play, go along with the trend, and then book profit as you see it. So now, what are the lower levels which we are looking at? So what I see is as long as we are able to close at the end of the day in Nifty above 17,600 and in Bank Nifty above 42,000, the bullish poise could continue. But if that were not to be the case, then you could see Nifty traveling all the way towards 17,200 to 300, where again a decent set of support lies. And in Bank Nifty, you will see it traveling all the way towards 41,000. So these are the levels which I'll be tracking for this expiry, which is happening next week, and also for the next few weeks.
Right, Raja, since you mentioned IT, quite a few queries coming in on our live feed on IT. Alexander has written in and he wants to know your thoughts on whether this is the right time to accumulate HCL Tech. And there is another query on Midcap I.T, KPIT. Naveen has written in and he wants your thoughts on that. So what should one do with some of these large cap and mid cap counters now?
Yeah, so what I would say is that yes, there are certain IT stocks or IT-centric stocks which are continuing to do well, and like KPIT is one of them. So KPIT is definitely in a bullish frame of mind, and every dip has seen a buying possibility. So as long as 750, well, that seems a bit far away. However, if 750 is not given away, one could continue to hold on to the KPIT setup. But what you really need to understand is that the IT is undergoing a lot of pain at the moment. And I would not be a buyer in IT. I've been saying in all the shows which we have been interacting that IT is a sell and a sell on rise opportunity. And that has been the case over the last few weeks. And like I rightly said, it has come to a very important support, and the support has been tested thrice. So again, if the price tests these IT index support, then we could see more damage in IT. So if you want to be a buyer, then don't come into IT. But then IT is a good place to go short.
Right, IT is a good place to go short. I would also like to highlight a brokerage report that has come in on the IT pack. JP Morgan has come out with a report on IT companies. It has downgraded Tech Mahindra to underweight from neutral. Target price has been cut to 900 rupees per share. Emphasis is another one that has been downgraded to underweight from neutral, and the target has been cut to 1550 rupees per share. Q4 results of TCS, HCL Tech and Infosys highlight weakness in BFSI and telecom verticals. That's what JP Morgan is saying, and it believes that Tech Mahindra and Emphasis will get impacted given high exposure of both these verticals. And in fact, troubled verticals do put Q4 FY23 and FY24 growth and margin at risk. So a lot of EPS cuts also announced for Tech Mahindra by JP Morgan. Let's also shift focus to Reliance Industries. The company will be reporting its earnings today. As far as expectations go, it is likely to report double-digit growth in its consolidated EBITDA for Q4. Operating profit is seen up 17% on a YY basis. It's the retail and geo businesses that will continue to have a steady run for Reliance Industries. Raja, how should one play this counter as we head into earnings in today's session?
Yeah, Reliance, especially if you see in this entire, in the last few weeks or the entire from the start of the year, it has not really been able to muster up enough courage to show a positive bias. Well, there have been steady news flows which have emerged, and all these news flows have only indicated that yes, there could be a positive traction, and that continuously ensures that people are able to generate some positive enthusiasm. But what's really happening is that the prices are unable to drive up the entire momentum, and it will continue to be in a range-bound manner. So I do not see any kind of movement here. It is going to be largely listless. So I will be avoiding this counter at the moment. Yes, it used to have its earlier impact on the market movement, but that seems to be waning off.
Right, another result candidate would be ICICI Bank that's reporting its earnings tomorrow. The bank is expected to hand in a 30% growth when it comes to its net profit on a YY basis. And NII is also expected to increase 37% on a YY basis. Raja, would you say that, the results are, in fact, would give direction to the market given the kind of weightage that ICICI Bank has on the index? So, in fact, HDFC reported a 20% growth, but do you expect ICICI to take the lead and, pave the way for the index to head higher going forward?
Yeah, I would definitely agree with you because even in the last quarter, ICICI Bank came out with better numbers, and it did bump up the bank Nifty. So if that were to happen now, then we could definitely see the bullish poise in bank Nifty returning once again. And like I said, that on an immediate basis, 42,500 to 600 is the immediate hurdle. If that were to clear off, then you could see the region of 43,000 to 43,300 in bank Nifty. Now, to do that, some heavyweight has to perform, and HDFC Bank, though it came out with some decent numbers, there were some mixed, muted reactions to HDFC Bank results, and that is why you are not seeing the kind of momentum which you expected. Now, it's a turn of ICICI Bank to shore up and show up some momentum here. And if that were the overall setup is definitely good. So unless 870 is compromised on the downside, I don't see any kind of negative bias in this. So this could be a good counter. If you want to take a risky bet at this moment, then ICICI Bank would definitely be a good play on the long side.
Well, ICICI Bank, a good play on the long side. Let's also talk about ICICI Prudential. This company reported its earnings yesterday post-market hour. Strong set of numbers, 36% growth in value of new business on a YOY basis. VNB margin has also come in at 32% versus 29.5% compared to last year. The stock was up and about in yesterday's session as well, and over the last 5 days it has done pretty well. More upside, should one look at this counter now?
Yeah, I would say that the stock has put in a bottom here, and I would definitely be on the long side in ICICI Prudential. Even if the numbers are also pointing towards it's supporting, it's giving good tailwinds to the price action, and I would definitely say that you could look to buy in here. Immediate target is closer to the region of around 500 to 525.
Right. Let's take up some viewer queries then. This one is coming in on Pidilite. Mahim Kumar has written in. He wants to know your thoughts on this counter. It was pretty flat in yesterday's session, but over the last 5 days, it has gained somewhere around 2% or thereabouts. What would you advise investors to do, given the fact that it is inching towards, 2,500 now?
Correct. So Pidilite is actually moving towards its 2023 high. And what is interesting in Pidilite is that it had undergone a major consolidation, and it has gone up above an important resistance zone, which is around 2,400. So it is continuing to hold on there, and I would want to see it closing above this zone. So I would wait for it, and then maybe towards the end of the day, I would be able to take a bet that yes, the moment is definitely positive. So overall momentum is on the positive side. The setup is indicating upward traction. So you could see a push towards 2,500 to 2,550 by the end of next month.
Right, so that's the call on Pidilite. The next query is coming in from Shakti Singh, and he wants to know your thoughts on Eicher Motors. It's heading towards its 52-week highs, 3,800 or thereabouts. Right now, it's trading at 3,250 levels. Steady move towards that level now, going forward?
Yeah, so actually, if you see from the setup point of view, it has come into a very strong resistance zone. And if there is a reaction from here, okay, if there is a reaction from here to the downside could be quite swift. So those who are intending to initiate a long should wait for a level of 3,350 to cross. Otherwise, it is an ideal opportunity for those who want to engage into a short side, because it has come into a very strong resistance zone. And if the markets were to show some weakness here, then this could be a good trade to go short into.
Right, a good trade to go short into Eicher Motors. Let's take up a query on Divi's Lab. Abu Bakr Jasim has written in, and he wants to know your thoughts on this counter. Now, this stock came under a fair bit of pressure yesterday, but over the last few days, it has been a steady gainer on the Nifty. Would you advise investors to look at this counter on dips?
Yeah, I would advise, because pharma as a whole had undergone a lot of pain over the almost more than you can say a year of pain pharma sector has endured, and what you're seeing right now is some relief rally which is emerging here. So I would continue to believe that this rally will continue, because the overall scenario is also pointing towards some positive trends in pharma. The Indian pharma sector has been able to buck the trend compared to the US. So what is really happening is that every dip in the pharma space, you can take the big ones have already started firing. Now, the other names which didn't fire are like, for example, Glenmark Pharma, Oro Pharma. So they have done really well. Cipla has started moving, Divi's has started moving, Dr. Reddy has started moving. So there is definitely a concentric movement of stocks in the pharma space. So every dip should be an opportunity here. So I would look toward dips towards 3050 to 3070 to buy into. Yes, it is in a correction mode because it has reached an important resistance zone around 3350. So a dip would be a good opportunity to buy into the levels which I have mentioned.
Right, buy on dips is the strategy that Raja is recommending on Divi's Labs. Let's take up a query on Aditya Birla Fashion. This one is coming in from Tariq Ahmed, and he wants to know whether he should be buying this counter or not. Now, it's just coming off its 52-week lows. In fact, on a YTD basis, it has lost somewhere around 20% or thereabouts. What should he do with this one?
Yeah, see, this stock had undergone a major price erosion, and what you are seeing is basically a relief rally here. But what I'm finding is that relief rally is not inviting more buying into this. So I would not be a buyer into this because I see that the rally here will definitely suffer some price damage. So it's best to avoid this counter at the moment.
Right, best to avoid it at the moment. That's the call. Let's take up a query on one of the defense stocks. This one is coming in from Krishna Reddy Kohli, and he wants to know your thoughts on Masgaon Dock. He holds a few shares at 780 rupees a piece. He is making a loss of 60 rupees or thereabouts on per share. So should he hold on to it, or is it time to exit?
Yeah, if you see the overall trajectory of the price move continues to be on the positive side. And yes, it would take some time for this entire price action to give you a return. There's no doubt about it. But then the overall prospects seem fine. So you could hold on till it goes below 650 levels. Yes, the stop loss is a little deep, but you should continue to hold on because the overall prospects have not changed. And it depends on how much of staying power you have. Otherwise, if you see the price has reached an important resistance zone, and if you're not losing much, you can exit your trade. Otherwise, if you are able to hold on for the next 6 months, you will see it crossing its high of 950 as well within the next 6 months.
Right. Hope that answers your query on Masgaon Dock. Another query is coming in from Akshay Gujarati, and he wants to know your thoughts on KPR Mills. Now, this stock on a YTD basis has done fairly well, and it's actually moving towards its 52-week highs of 687 or thereabouts. Are the prospects looking good on the charts now?
No, KPR Mill has been in a sluggish momentum since the last 1 year, and it continues to do so. I would not look to be a buyer in this, but if you're having a position, you can continue to hold on, because the overall prospects of this counter is not disturbed.
Right. This wraps up our query segment for today. Raja, before I let you go, do share some of your stock recommendations for our viewers this morning.
Yeah, so I will be going with a long and short considering the nature of the market. So I would look to play on the long side in Indian Hotel, and I would buy it at current levels with a stop loss at 330 for an upside towards 345. And one stock on the downside, I find that HCL has reached some important resistance zone, and we saw some reaction yesterday. So I would look to short HCL below 2270 with a stop loss about 2305 for a drop towards 2220.
Right, a buy call on Indian Hotels and a sell call on HCL. With that, Raja, thanks a lot for taking out time and answering all our viewer queries and sharing your thoughts with us this morning. Well, with that, we are completely timed out, and it's time to say goodbye from me and the entire team that put the show together. But stay tuned to Moneycontrol, because coming up next is Opening Bell.